So the second part here in terms of resources, the live feed to monitor intermarket correlations. I've just put a brief explanation: risk appetite, risk aversion. I'll just go over it. So risk appetite is basically when investors are prepared to invest in riskier assets, okay, because they want to look for higher yield. All right. Risk aversion is when investors seek safer places for their money, which normally is sort of equal to lower yield. All right. Here again, just type risk appetite or risk aversion into Google. It'll give you tons of information on the stuff. I would just say, be aware of it, okay? And I'll show you how I use it. In terms of risk appetite, what I'm looking at is I'm watching equity. So I've got the FTSE, I've got the DAX, S&P, and the Dow. Commodities, I've got gold, silver, and oil. And the high yielding currencies, the other ones, the majors, the euro dollar, pound dollar, Aussie dollar, New Zealand dollar, and obviously a few others. These are sort of the assets that I keep an eye on in terms of risk appetite or risk aversion, okay? So basically when these rise, okay, we're looking at a risk appetite environment. Okay, so when your equities start rising, gold, silver, oil, and then your euro, pound, Aussie, New Zealand dollar, and a few others, you're normally in sort of a risk appetite and environment. I'll show you how I look at it. Here again, this stuff doesn't always work, so don't think this is something that works 100% of the time, but it can give you an idea, should I be taking this trade in this direction, or should I be going with the flows and the actual sentiment is moving, bullish or bearish. Now, risk aversion, basically your Japanese yen I want to be watching, okay, so your yen pairs, euro yen, pound yen, Japanese yen, the US dollar and bonds, okay, and when these rise, you're starting to look at the risk aversion side. In terms of what we went over above here, equities, commodities, and your high yielding currencies, when those fall, okay, then you can kind of start to picture where we are in terms of risk appetite versus risk aversion. All right. So basically, okay, straightforward. Equities, commodities, and high yielding currencies, when they rise, okay, and when they start all rising together, you're normally going to find some sort of risk on or risk appetite in the marketplace, okay. And when you find that you've got big moves in the yen, US dollar, and bonds, when these start to rise or gain strength, you normally starting to look at a risk aversion environment, okay. And then these up here, your pairs that you're watching sort of rise during risk appetite. During risk aversion, okay, they normally moving to the downside, okay. Now, as I said, this is not set in stone, and I'm going to show you how I use this, and I do find it beneficial in my trading from when I'm sitting down at the computer. Just want to show you how it can be beneficial to your trading. So basically, this is one live feed, okay, to monitor the actual market correlations. So very simply, I've got a chart up, okay, set up like this. And you can see we've got the S&P 500, we've got the DAX, we've got the FTSE, we've got oil, silver, gold, we've got pound dollar, CAD, dollar yen, euro dollar. I think this is the Aussie dollar and New Zealand dollar. And here again, I just sort of draw in the key technical areas. Okay, you can see I've sort of drawn them in here. You've got basically horizontal support, resistance, and trend lines, just to get an idea, what's going on across the broad spectrum. And you can see I've actually put in these arrows across here, so you can see, we've got S&P 500 down, DAX down, FTSE's down, oil's pretty much trading in a range. And you can have a look at the dollar pairs, okay, and the yen pair. So euro yen and dollar yen, all right, we're down, so the yen is gaining. And you can see here euro dollar, New Zealand dollar, Aussie dollar, dollar CAD. So, and then the pound dollar, you can see, the dollar's gaining. So we have the yen gaining, dollar gaining, and we have indices selling off. We've got a bit of a rally in commodities here, okay, but overall, okay, we've got a risk averse market environment. So this is how I use it, and I have a quick glance to see, what is the general market doing. Do we have a bearish or bullish sentiment, and how do I want to sort of come into the day in terms of structuring potential trades?